episode of Sonoma Brain Trust. I'm Daren Blonski with Sonoma Wealth Advisors. With me, I have my co-hosts, Mary Piasta with Valluzzo, Haeuser, Valluzzo, and Piasta. Let me get that straight. Yes, for the win, for the win. And Chelsie Runnings with Better Home and Gardens, our local real estate expert. So here's the purpose of this show. It's to keep you dialed into the facts rather than get lost in the drama of everything we've been going through. We started this show during COVID and have continued on. And the hope and the idea of it is really to give local people in Sonoma a way to know what's going on and to have a little bit more information in real time. So we shoot this once a week for you. We'd love to have you on if you're local and have some information you'd love to share, a business, or are involved in the community in some way. Reach out to us. We're all fairly accessible in our various professional capacities. So Chelsie, tell us what's happening with this real estate market, because it continues to be an epic run, and things in the price side are moving up and houses are getting sold pretty quickly. And anyone I talk to that's trying to buy who's local is really struggling to buy because there's thousands of people just piling on the homes for sale here in the Valley, Napa Valley, the whole region, really.
Yeah, so every week I come on, I feel like I say the same thing. We have not enough inventory for the buyer demand, and houses are moving insanely fast. Currently, we have 104 properties on the market in Sonoma Valley. 30 are under contract or in escrow right now. And in the last week, since we got together last Tuesday to today, we've had 14 properties sold. And the prices just keep going up. And I think, you know, in a down economy, everyone assumes that the real estate market's going to go down, but we're not seeing that. And there's a few factors that are doing that. It's those really low interest rates. And it's also the urban flight syndrome, which we've talked about before, people leaving the city, trying to spread out, get some breathing room. And right now, Freddie Mac actually came out last week with a 30-year fixed at 2.88%. And there was actually one mortgage wholesaler who announced that they were doing 30-year mortgages under 2%. So I've heard my aunts and my uncles tell me when they bought a house probably like 30 years ago, they had 14% interest rates on those mortgages. So even though the inventory being so low is keeping house prices up, it's so cheap and affordable for people to borrow money that those buyers are out there. And just to give you guys an idea of what the difference is in these low interest rates, even though we're having higher priced houses selling. In 2018, when home interest rates were about 5-ish% or around there, versus in June when we were in the 3%, a typical, so not Sonoma, but a typical household mortgage was $2,460 in 2018. And in June of this year, a typical mortgage was $2,160. So it's a $300 monthly savings, which over the lifetime of a loan comes out to over $100,000 in savings. So if that should put into perspective, like just what these mortgage rates being so low actually mean for home buyers.
But doesn't it also mean that the price of the homes are inflating a bit? So if you can borrow more money, then all of a sudden you can bid more. So that house that if that 8% loan you wouldn't have been able to afford at that price value, now you can, you know, buy more house with it. So
exactly. So buyers are having a little more flexibility and a little more room to really stretch their dollar more. And that's why I think we're seeing so many people, not why I think, why I know we're seeing so many people come from like the city, because they can really stretch their dollar in areas like Sonoma and Petaluma and Napa and buy these houses, which pre-COVID, we slept at home and we lived outside of home, right? We went to work, we went to the gym, we went to restaurants, we visited friends, and then we went home and we slept. Now we're home, we're working, you're educating your children, we're working out, we're entertaining our families at home more now. So the needs for home space to be bigger and more efficient have changed and evolved. People are looking for yard space, home gym, office space, a place where you can educate your kids now since you're doing distance learning. So yeah, the home prices, they are going up, but with the interest rates being lower, buyers have more spending power right now.
Well, begs the question too, like if the prices are going up, but we're using them for more aspects of our life, is that worth it, right?
Well, homes are they're more valuable or more important to people now than ever, right? I mean, this is our safe place right now. This is where we feel safe and secure.
Well, we've also got shortages too going on, right? Not just building as well. I mean, there's big time shortages happening right now.
Well, we already had that too. You know, we're in fire country, right? So the builders were hard to get initially. So
the price of lumber has skyrocketed with all the rebuilds and the shortage in materials. It's a struggle. I mean, I don't think there's really an answer for it because we have sellers who are scared to put their houses on the markets. We have not enough material to meet the demand for the housing issues that we've had. And we have these buyers who want to buy and spread their wings and become homeowners and make a place for their family, a safe place. So it's a struggle for sure. And I don't know when we're going to get out of this low inventory issue, but that's where we're at right now. And that's why our market is I'm going to say it's on fire, and that's a really bad word to use right now.
I know, I just got a Nixle alert. So
yeah, the markets are literally on fire. We can't keep up with it. I have home inspections scheduled for later this week, and I was trying to get them done, and the home inspectors told me they've literally never been busier than they are right now. They're scheduling months out in advance.
Yeah, I've got a client buying a home right now up in the Sierras, and they can't get an inspection. They don't even know how they're going to close yet because in order to get the loan, they need the inspection. And they just haven't even heard from the inspector. An interesting kind of fact over figure, foreclosures are, as a total of loans, are at 0.7 right now. So they're very low. They're at historical lows on foreclosures. But what's really interesting is delinquencies as a percentage of loans are up around 8%, 8.2%, which is 10% was the high in 08. So there is a foreclosure wave coming, right? And how long does Congress continue to kick that ball or the legislatures kick that ball? So at some point, these delinquencies turn into foreclosures, which to your point, Chelsie, could be a transition point when it comes to the loans or in the quantity of homes on the market.
It would be interesting to know if these foreclosures are primary homes versus secondary homes, or
foreclosures are low. They're not even 1%.
Right? Are we going to see
low? It's delinquencies that are high.
Delinquencies.
Well, and then what's the difference between a delinquency and, you know, the people who are opting to pay their mortgage later, right? So the forbearance issue. So, I mean, how much of it's voluntary, you know, because I know people who've just said, oh, hey, you know what? I don't have to pay my mortgage. You know, the bank's going to let me space it out. So they're choosing to do that. So it's more of a financial decision that then they will come up with that lump sum later versus the folks who are actually in distress who can't pay their mortgage because they're unemployed. So maybe unemployment numbers too.
Those numbers are going to jump up as our lovely politicians continue to go back and forth over our stimulus package that they refuse to come to agreements on. And
this is all getting so political, isn't it? Daren, what do you think about
I was going to say, speaking of politics, I was joking before we came on. I woke up in a rather sarcastic and mood today, but I can't tell you how many appointments and conversations I've had with clients. I actually do a Tuesday night office hour where we open up Zoom and we get about 20 to 30 people usually joining us. And my partner and I talk about macroeconomics and all this different stuff. And today the topic is elections because we keep getting this question over and over like, hey, the elections are coming. What should I do with my money? Well, the answer is the same thing you always do with your money. Keep it invested and keep going. Don't worry about the election. Well, Daren, but what if the Democrats win? Well, Daren, what if the Republicans win, depending on what your political flavor is? So if I'm successful in the next few minutes, I'm going to go through some numbers with you all here. I'll be successful in offending both sides equally. So the reality is that it doesn't matter. So when it comes to politics and elections, it's much more a function of certainty and uncertainty is the discussion. So what I'm going to do is a little sneak peek for you guys into our Tuesday night call that we're going to share with our clients and family and friends this afternoon. But let me just run through some facts and illustrate these points for us here. So really what I want to leave with the watchers and people watching this YouTube today is the elections and market performance is simply a discussion of certainty and uncertainty. Has nothing to do with Republicans and Democrats. And we've got to unwire our brains. However, politicians love to say, hey, Mary, if the Democrats win, the markets are going to fall. Hey, Chelsie, if the Republicans don't win, the markets are going to fall. Like they love to take those fear items. And Mary, you might know this better than any of us because you used to be in the political world. But politicians love to turn our brains into single issue voting, right? Like I can grab a little thing in your brain and scare you into single issue and not to understand the complexities of the election, then I win, right? So elections are fundamentally about certainty and uncertainty. Cool? Everybody with me on that one? So just as a review, right, you got the Electoral College, you got the Senate and the House. And I'll also say that whoever wins in November, the best thing that can happen for this country is a clean sweep across the board. Whether it's Democrats that win or whether it's Republicans that win, but a clean sweep. And this just shows you what would need to happen to move the Senate to the Republicans versus the Democrats, vice versa. And you can see it's possible that the Senate flips. But the House of Representatives, that's going to be a pretty difficult process if the Republicans are hoping to get the House of Representatives. And the fight's really going to be in the Senate. And so again, it's really, what we do know from the facts is that markets tend to do better with certainty. So if the markets know that, hey, the Democrats are in power across the board, they're going to perform differently than if it's split between Republicans and Democrats. Vice versa, if the Republicans are all in power, then the market's going to likely do better. Now, I wanted to show this chart because I think it's very telling, right? So the blue represents periods of time where the presidential party was Democrat, and the red represents periods of time where the presidential party was Republican. And if you notice here, it doesn't matter, right? So it's this trend we're looking at, right? The trend is up, right? The trend is your friend is an old trading concept we always talk about in my world. And if you notice during the Obama administration, which is right here, the trend was up. And look, there wasn't really a trend change once Trump won. It still kept going up. In fact, you could maybe argue that it's flattened off now. But then if you look at the market that the Democrats or Obama inherited right after the 2009 crisis, well, the market was down in the basement, right? So it just was all up from there. So the point is that it's how a Republican or Democrat does when it comes to a market is much more a function of what they inherit than it is a function of what they do. Now, did it help that President Trump rolled back regulation on the financial industry? Yeah. Did it help that President Trump rolled back regulation on oil markets and oil companies? Yeah, that helped. Now, did it help that they passed one of the largest tax bills in history? Yeah, that helped. Did it help that they cut the corporate tax rate to 21%? Yeah, that helped. Right? All that helps continue on moving the markets upward. But is it directly correlated? Was it because Trump won? No. I mean, it's clear from the graph that that's not the case. Was it because Obama won? No, it's clear it's not. We were in the basement. So it was just all up from there, right? So then you look at how do Republicans and Democrats feel about the markets in general right now. And those who lean Republicans, the red line, those who lean Democrat are the blue line. And what you tend to see is when Republicans are in power, then they feel a little bit better about the overall market and economic conditions. And when the Democrats are in power, they feel a little bit better, but then it switches, right? But in general, the take home here is people don't feel too good about the economy right now. As Clinton used to say, it's the economy, stupid. So that's why you're seeing so much money get piled into the markets to try and get these suckers moving, rocking and rolling. So this is returns during election years. And so non-election years versus the election years. And ultimately what you take out of this is that it pays to stay invested during these times because you just don't know, right? And that's the take home. So whether we think Trump wins, whether we think Biden wins, stay invested, stay the course, right? Right now, we like to look at the betting markets versus the polls because the belief is people vote with their money, and where the money is, that's the way the market or the elections are going to go. And right now, Biden's ahead of Trump in the betting markets. And then this just shows you who's betting on what the makeup of the House and Senate's going to be. And right now, the bet is that the Democrats take the House and the Senate. So this is some interesting data. This looks at the percentage returns on the Dow Jones Industrial since 1900 for every single presidential candidate. And what you can see, the average return during their presidential candidacy is 60% or up, the percentage change. The average Republican was 44.2% up. The average Democrat was 85.9. So it's just not factually true to say that, oh, because the Democrats win, that the market is going to go down. Now, you could argue that this time is different, that this time the Democrats are so attached to the far left of their party that, yeah, they're going to crush the market because Warren's going to step in and beat up Wall Street on some level, and dotty, and Sanders has a big influence. You could make that argument. And that's what the argument and the narrative that you're hearing come out of a lot of the Republican sides of the aisle. But the reality is the facts don't fit that. The facts say that it's much more mixed. It's much more dependent on what that person inherits when they step into office. Case in point, everyone likes to say, well, the market's been doing so well since Trump. Well, here's the truth. In Obama, the percentage change, and these are 11 different sectors in the S&P. The S&P went up 182% during Obama. During Trump, it went up 41. Okay, so the facts, those are the facts, people. Like you can't argue with them. They are what they are. And at the end of the day, does it mean that, the Democrats are better than the Republicans? No. But at the end of the day, what it means is that Obama inherited a big mess, and whoever wins this election is going to inherit an even bigger mess. And here's why. And this is a cartoon I love I came across, right? So there's Jerome Powell handing some QE and some rate cut drugs to the market, and the market's buying that because that's what's happening right now, right? So the market is being totally and completely stimulated by outside money printing and has nothing to do per se with the real economy and what's happening. So the end of the moral of the day, it's about certainty and uncertainty. And the more certain the markets are about what the outcome is, the more certain we are about what happens after the election, the more clear it is through the election, who wins and who doesn't win, the better the market will do. To try and bifurcate our beliefs and say, oh, it's Republicans, oh, it's Democrats, that's oversimplistic. It's not a reality. The facts don't support that. Okay, I'm off my my pedestal now.
So certainty is also a thing that we're seeing in the legal world with respect to the fact that we have now enforcement protocols and measures that are in place. And so it's, interesting that, we have that layer. Businesses know, individuals know they'll be fined monetarily if they don't follow the edicts in Sonoma County. And I think also in the legal world, we're kind of looking to see what happens with respect to some more of the eviction moratoriums, whether they're extended or lifted, and how that's going to roll out for landlords and tenants both equally. There's some carve-outs in the eviction land that have been percolating a bit and people are wondering more about. And I think as we go on through September, we're going to have a lot of things to talk about here and share with, all you viewers out there. So stay tuned in law, and I'll keep you updated.
What's interesting, Mary, is I talked with a local retailer yesterday, and they're pretty prevalent here in town. And I was asking them, what are your numbers? What are you off this year? And they're saying we're off about 20% this year. And that seems to be what I'm hearing, that most businesses in Sonoma are off about 20% year over year. What's interesting now that the county's stepping up this quote unquote fining people for not complying is that now you've got these businesses that are off 20% worried that they're going to have a $10,000 fine for their second offense. And so they're having to control what the traffic in and out of their stores are. So I think it's really short-sighted, right? It's like, businesses are already hurting, and is it really businesses that are the problem with the outbreak? Are they really the issues? No, it's the issues are people going to work and then getting together with their families.
Or reopening schools. And, when we talk about business, we have to even dissect that, because the employment lawyers I know who just help businesses are saying that up to 40% of their clients will not reopen. So the businesses who are going to be fined are the businesses who are the lucky ones who can reopen. So that is a small subset of the business community. Like, we're not talking about everyone. I think, you know, as these months roll on, we're going to be looking at these businesses who are not going to reopen. And that is going to be extremely problematic.
I think come 2021, we're going to have a huge eye-opening of not failure, but things that I think we did a Band-Aid for a lot of issues. We got those SBA loans, which turned out to not be that great after all. And I feel like right now we're just at the tip of the iceberg. We haven't really seen how this is really going to play out. And I think come 2021, we're going to really see some really heartbreaking numbers come out on the business side of it, and how many businesses stay open and can sustain after all of this is said and done. And these, I mean, a few months ago, crossing the Jordan, the thrift store shut down because they were fined and they couldn't afford to stay closed. And then they got fined and they couldn't afford the fine and they shut down.
Well, and then the reopening process is expensive as well. So the decisions that have to be made, the purchases that have to be made, the infrastructure, the additional time, and, you know, you'll talk to local restaurant owners here who have reopened, and the time it takes for them to set up their operations in a park. I mean, that's all just money out, right? Because they're just setting up tables and bars and everything. So it's a really complicated time right now for business. And I think you're right, Chelsie. I think the Band-Aid has been on, and we're gonna, you know, see what happens and be there to support business in the ways that, you know, we can as things uncover, I guess.
Well, it's an interesting dynamic too, because it's not so much as just about, there's a lot of businesses models that are no longer profitable because of COVID and won't be. Right. So if you think of all these business models that are dependent, we've talked about this for months, are dependent upon putting people in a small area, turning tables, high density, those businesses are not viable anymore. And maybe we get a miracle drug, a miracle therapeutic where COVID's no longer an issue, but I don't think that's going to happen. I do think that it's with us to stay. I think it's going to change our lives drastically, because if it's not COVID, it's the next one coming. Then what do we do? Right. And so I think it's changed all of our mindsets and how we interact with other humans, and that process that will put into question the viability of many businesses.
Well, but on the other hand, you're seeing businesses shift and reinvent themselves. Like, I have interior design friends who've totally changed their business models, and now they're designing gardens, right? Or, you know, we had Mary Jambone of the Gymnastics Academy on our show, and she's talked about now she's also basically kind of overseeing tutoring, you know, but so she's gone into in a whole different direction, as well as small group coaching. So I feel like, you know, it is the time for reinvention.
Well, you're exactly right. And that was Warren Buffett when he came out and spoke 2-3 months ago. He said, you know, don't bet against America. Just don't do it. Right. You're making a mistake if you bet against America. And I think that's the point, right? It's like things are going to shift, and there's going to be these pivots and these new realities. And the sooner we can adjust that it's not going back to the old way, there's going to be a new way, and how we adjust our businesses to that new way, the better off we're all going to be.
Word.
Word. Well, we should close it there. Thank you, everyone, for watching another episode of Sonoma Brain Trust. Again, if you want to come on, chat with us, feel free to reach out. I hope you all have a wonderful weekend and rest of your week. And thanks, Chelsie. Thanks, Mary. And we'll catch up soon.